Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Virgin Galactic stock has gone on an absolute tear over the past week. Right now, shares are up 32% just in the last 5 days as I'm recording this on Wednesday. What's going on with this momentum and what should we look for? A lot of it has to do with an upcoming flight. But today I want to cover exactly how long it's going to be before Virgin Galactic is going to be generating revenue and potentially positive cash flow, because it may be a little bit longer than you think. But so I'm going to dig into those numbers and why a rising stock price is actually even more bullish for the company long term. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube. And if you're interested in more of my coverage, check out Asymmetric Investing, my newsletter below. I'll leave a link to that in the show notes. Covering a lot of amazing companies like Virgin Galactic there. I want to start with the stock chart and to show exactly how wild the last few days have been. You can see that the stock is up 32% in the last week. Now, this is midday on Wednesday. This may change a little bit before this video is published, but just an absolute tear for the stock. Now, keep in mind that over the last year, the stock is still down slightly, and this is a stock that traded as high as $50 a share. So still down about 90% from its highs, depending on when you got in. This is a nice little profit, but I don't want to read too much into that. But there's a reason that the rising stock price is going to be bullish for the company long term. This may sound a little bit strange, but Virgin Galactic is going to need to raise more money to be able to fund operations and actually get to the point where its business is free cash flow positive. One of the ways that you can do that is by selling stock. So a higher stock price means less dilution for investors and potentially that you could raise even more capital. I want to put a few numbers to this. This is the economics for the Delta class spacecraft. This is the next generation spacecraft, 6 seats, $450,000 per seat, flies about once a week, so 50 flights a year. Each spacecraft is going to cost $50 to $60 million to build. That's on top of any one-time development expenses, but a very expensive spacecraft, and these are not going to be ready until at least 2026. The current spacecraft is 4 seats, can fly about once a month, so there's going to be limited revenue and margin opportunities from that specific spacecraft until we get to the Delta class. So just from a ballpark standpoint, figure $50 million to build each ship, and each time it flies, the company is generating about $2 million in profit. So the payback is about 6 months. But again, you have to build these ships. So how is Virgin Galactic going to get there? Well, there's $874 million in cash on the balance sheet. Net cash used from operations last quarter was about $136 million. That's about the right range right now for the amount of cash burn that Virgin Galactic has. So that's about $550 million per year that the company is burning from operations. You can see here that that doesn't leave a lot of money given the $874 million in cash on the balance sheet. Now, if the Delta class spacecraft was going to be ready to go, let's say next year, maybe this could be a positive cash flow company. But let's go to some of the comments in the most recent conference call. And you can see the CEO said here, the first Delta spaceship entering commercial service will be in 2026. So basically 3 years from now. That same cash burn means that Virgin Galactic is going to have over $1.5 billion in cash just to get to the point where it can get to commercial operations. That's on top of actually building that spacecraft. So you're really talking about probably $2 billion in cash that's going to have to be raised just to get to a point where you can launch 1, 2, maybe 3 of these Delta spacecraft. Now, revenue is going to start coming in the door likely later this month when the first spaceflight takes off. Then you have a recurring revenue about once every month, somewhere in the range of $2 to $3 million. But that's not a ton of money when you're burning hundreds of millions of dollars per year. What you're going to need to do is get to a point where you can operate sustainably with these spacecraft that are coming, this Delta class spacecraft, and start generating 100 million or so per spacecraft in cash flow per year. I think this is a bigger financial challenge than a lot of investors are giving credit for right now. And Virgin Galactic has a market cap of $1.6 billion. I just ballparked that the company's going to need somewhere around $2 billion to get to the point where it's got Delta spacecraft operational and generating a significant amount of cash. If they have to sell that much stock to raise $2 billion. That means about a 50% dilution from the current share price. Now, if the stock continues to rise and let's say the market cap goes to $3 billion or $4 billion before any of that dilution, before any of that fundraising happens, or maybe the company raises debt, which then you'd have to pay interest on, maybe it's convertible debt. There are other options. But I think what we need to keep in mind right now, given the excitement that's going on ahead of next week's spaceflight, is that there's still a lot of risk getting to the point where Virgin Galactic is financially viable as a company. That's just the reality of this business. You don't go from burning $140, $150 million per quarter to generating cash overnight in something like space travel. So this is going to take a few more years. And right now, despite there being a ton of cash on the balance sheet, it's not enough to get there for Virgin Galactic. So the irony is the higher the stock price goes, the more leeway the company has to raise money by selling stock or maybe even debt to fund operations and ultimately get to where it's trying to go, which is having 4, 5, 6 of these Delta spacecraft operational and running flights on a regular basis. That may take into 2027, 2028. That's quite a while. The company's going to need some cash. But we'll see how management handles that. This will definitely be a major topic for the next conference call, and I'll be covering it here on Asymmetric Investing. So leave your thoughts in the comment section below. Love to hear from you. Don't forget to follow Asymmetric Investing and subscribe to my newsletter below. I really appreciate that, everybody. Thanks for watching. See you here next time.